Tim Biggam is lead option strategist down at Delta Derivatives. He's at the CBOE right now. So, Tim, what do you think about a U.S. steel or any kind of a pure sort of reflationary trade? You want to try and buy up on a low, or are you on the side of Goldman?
Yeah, I'm probably more on the other side of Goldman. I think it's gotten so bad it's almost, looking good here. Anytime you see, the kind of wash off, certainly a huge underperformer to the market here. And it really comes down to, the tariffs especially, Chinese subsidies, kind of coming into play. So I think between now and the next couple of weeks, you'll probably see the Trump administration with that phase one deal coming to the table, talking about steel tariffs being part of phase two, perhaps. So I just think there's some hidden upside in U.S. steel here. I kind of like the price action, especially that 1050 area as held here. So with earnings coming up at the end of the month, I'm cautiously bullish here with the defined risk sort of diagonal call spread.
Okay, so walk me through it. And by the way, I think the chartists, are on the side that U.S. Steel's shown a little bit of resilience around $10.50, $10. So if there is bounce, maybe it comes there. Walk me through the specifics of how you would put on such a trade, Tim.
Yeah, absolutely. So going out, we have earnings coming up January 29th. So looking to sell the January 31st expiration, $11, slightly out of the money calls, and then go out and buy the next week, the February 7th, 10.5, slightly in the money calls, paying about 35 or so cents for that last I looked here. I like that term structure of vol as well, really getting about a 18-point term structure of vol edge on that trade. Those Jans are pumped versus the Febs because of earnings. And again, I like it on the chart basis. I just think just a move slightly higher will get this thing fully profitable. And I'm a contrarian at heart here. So you talked about, the calls on Apple and Tesla getting upgraded. To me, that smacks more of a top than a bottom after the big run we've had. And conversely, with Goldman coming out that $9 price target, kind of smacks of perhaps a bottom here. So we'll see what comes to fruition.
So actually, I want to get your thoughts on that too, but just for 1 sec on steel to look at the trade, you've got the selling of a call further out. So if there is some big move to the upside, how does the payoff work for that, Tim? I mean, you're capped out at a certain point, right?
Yeah, we basically have, 50 cents plus any time premium is our max potential gain, but, 35 cents is our max potential risk. So, really looking if this thing finishes around 11 come the end of January, we'll probably get a, doubler on the trade here. So I kind of like that risk reward trade-off, and I like the fact it's only 35 cents, and we have another week to rehedge, bring down that initial cost if need be, if those 11 calls in January expire worthless.
Yeah, you're not asking for much here, right? Just about 25 cents to break even on the trade. And Tim, the expiry, does that wrap through the earnings? Do you capture the earnings with that?
Yeah, the January 31st expiration is right after earnings on January 29th. Hence that term structure of vol getting my way. And then hedging by going out a week. Like to keep the trades cheap here. And again, really not looking for much, as you said, just some sort of up move will get this thing in the green here. So I like that kind of play as well.
And to your point, the Jan 31st expiry is about a 62 vol right now. So it is pumped up a little bit relative to other contracts. Tim, you mentioned some of the really frothy stuff out there, the high beta trade that's come back with some serious energy. Now all the analysts are rushing to cover themselves if they were too bearish on just about anything from Tesla. I mean, even Beyond Meat yesterday was up $20. Analysts keep pumping up the Apple targets. I mean, when's enough? Do you really want to jump in front of that train when everybody's playing catch up?
Yeah, I think the price action we're seeing today and the fact that I love using option strategies where you can define your risk and get in front of that train here. And really the price action on Tesla and Beyond Meat getting obviously parabolic here, where that, ultra-free kind of cheap money has fueled, these short squeezes. Guys can just keep making the short squeal. Anytime you see that kind of price action, and Apple is almost like a cannabis stock of old over the past several weeks here. So you're just seeing this, over urgency to get in. Anytime you see that, you don't know where it's going to end, but you usually know how it's going to end eventually. So I like maybe buying just some simple, put verticals here, just positioning to be a seller on further rallies and define my risk here. I think at some point we're going to have a pullback. It'll probably be healthy long term. NASDAQ's up 40% over the past year. Russell's up about 15%. So that performance differential getting a little extreme, especially on those mega cap NASDAQ names.
Yeah, all right. Nice, Tim Biggam. Really good stuff here going across the market for us. Appreciate it, as always, joining us from the CBOE's lead options strategist at Delta Derivatives.